Hi. 34 years ago, in 1987, the market crashed, 23% down in one day. Why? Because owners of stocks assumed market liquidity will always be there to sell into. They were wrong. But why is it important today? Because today's stock owners assume the same thing. They were wrong in 1987, they were wrong again in 2008, and they are wrong now. Don't just take my word for it. Christine Lagarde, formerly head of the IMF and now head of the ECB, said she is concerned about what would happen if all owners of the SPY ETF, the SPY, would decide all at once. The SPY is a fund that owns all S&P 500 stocks. Why is she concerned? Well, here I have to make a little segue into how today's ownership is different than what it used to be 34 years ago. Once you understand that, you'll also understand why the risk of a crash today is very high. But first, what's ownership? Ownership used to be a piece of paper signed by a lawyer or a notary or someone authorized by the government to sign such a document. That signed paper said that you have the right to enjoy this asset while others do not. For example, a title deed gives you the right to live in a house and invite others of your choice to live in it or to sell the house. But if homeless people crashed in, you can go to a judge and show her or him your ownership paper, and this would magically make the judge send the bailiff or the police to kick the invaders out. For a stock, the equivalent was a paper certificate with your name on it that entitled you to dividends, financial reporting, and voting for the board, or a piece of the sale price if the company was ever sold. That piece of signed paper had the magic to move a judge if anyone tried to rob you of your ownership right. In that world of 34 years ago, the people confirming by the signature on paper that you were rich were lawyers and accountants. Then the world changed. About 30 years ago, a law was passed that said that not only a paper signature was legally binding, but also an electronic signature was binding. What's electronic signature? It was an electronic timestamp of unique nanosecond via satellite and a 256-bit encryption. That law changed the world because now you could move a judge not just with a notarized document signed in ink, but with a printout or a hard drive signed with unique electronic bits. And the person who could say that this is true, that you are rich, was not an accountant in a suit, but a tattooed youngster with a ponytail and earring, an IT person. At that moment, the very concept of ownership changed. But why does it matter to our topic of market crash? Because before, you needed to get a piece of paper to confirm your ownership or transfer it. Now you can just have a blip on a screen with a copy on a hard drive somewhere, encrypted. Well, fine, you say, but why does it matter in crashes? That is, stocks buys and sell. Remember what I said about transfer of ownership. And the answer is speed of transaction. In that old world, if you wanted to sell your 100 shares of Bell that you got from grandma and buy with the proceed 1,000 shares of Moose Pasture Mining, you had to call your broker to do it for you. And most likely, he or she would try to dissuade you. Today, there is no broker between you and the buy and sell button. So, your wild impulse, whether panic or euphoria, can be transformed immediately into a legally binding transaction with a click. Assume you just watch a hysterical announcer on Fox News or CNN saying that the world is ending because of COVID, and you panic. You and a million zillion others all can click on the red sell button, and voila, your order is in. Sell everything I own at market. At market means sell at any price. And because your sell click was encrypted and timestamped, it is legally binding. There is no oops. There's no I made a mistake. I changed my mind. No. Your shares are gone in a microsecond or a millisecond and 10% below the market price, perhaps maybe 20% at market. Bam. Why so much below? Because in a panic, you are likely not the only one panicking. Chances are everyone is, which is what Christine Lagarde meant. And when everyone clicks on the button that says sell everything at any price, what do you think will happen to the market? In other words, who is there to buy what everyone else is selling in a panic? The answer is almost no one. And that's when the market crash happens. Madame Lagarde said that since so much of the public savings are today in ETFs, that is, stocks who own other stocks, if all the public panics together because of the internet and all cling together on sell everything, then everything will go down all at once, and the volume will be so high that the market could not accommodate it. It's like trying to push 1 million truckloads of syrup through a narrow nozzle. The nozzle will blow up. In 1987, the market blew up because of a financial innovation called portfolio insurance that convinced idiot fund managers they can buy puts to insure against any market decline. Of course, the brokers who sold them these puts sold stocks short on the other side to hedge themselves, which made the market decline more, which made the idiot fund managers buy even more puts, and so on in a feedback loop. In other words, an avalanche. Luckily, at the time, interest rates were reasonably high, so the Fed could lower them and print more money to help the market recover. Also, the market was cheap, so it did recover. That was my first crash. At the time, I was research director at Gordon Capital, and we saw it coming. But that's another story for another day. 21 years later, in 2008, the market crashed again, though not as fast as in 87. That time, the Fed had to print more money than in 87, 800 billion in total, and cut rates again. And then the market rose again because luckily, it was again reasonably cheap. Finally, last year, in 2020, COVID happens. Once more, panicked by the internet, everyone was sure the world is ending. So everyone together pressed the red button of sell everything at any price. Sure enough, the market went down the drain. Bang! Luckily, one last time, the Fed panicked also, so it cut rates to almost zero and printed even more money. Trillions this time. So the market recovered one last time. But since the Fed printed so much money, the market now, pushed up by all this rocket fuel, is very overvalued. So much so that it's beyond nosebleed. It's brain bleed level. Price to sale ratio of 3 times. Market to cap of GDP, Warren Buffett's favorite indicator, higher than 1929. The CAPE ratio of 35, the highest in history. What's worst? Today, everybody in the world, not just pros, but housewives, house husbands, and house kids, all have their money in the market. All of it. Because they are sure that with their unique intelligence and expertise and their finger on the sell button, they can sell 1 minute before everyone else does. Based on what information, please? Why? On what they see on Reddit or YouTube or Twitter or any of the other sites that everyone else also sees. Just like you. Since I'm old and my hair is gray, I have seen all this before, several times. So I know that all the enthusiastic amateurs out there are going to lose not just their shirts, but likely their underwear too. Don't you be one of them. Here is Warren Buffett's metaphor to this market stage. The market is Cinderella's ball. The music is heavenly. The crowd is sublime, and the dance is crazier by the moment. It's so much fun. Every woman investor a princess. Every man investor a prince. Yes, we all know that come midnight, if we are still here, we all turn into pumpkins and our stocks turn into crap. But the music is so great, and it's so good to feel like royalty. So let's stay only 5 more minutes, and another 5, and do just one more trade. We'll watch the clock over there so we can rush out the door the very last minute before everybody else. We only have to push that little red sell button on our cell phone. And we'll be out. Or will we? Remember, everyone has the same red sell button. And the crowd is huge. And the door is narrow. And the clock has no hands. Can you hear it ticking? How long do you want to stay in? Me? I'll be waiting outside, sitting on my gold, with cash in my pockets to buy the crapped out stocks that everybody else will be selling. Why don't you do the same? That's all for today. Please let me know what you think of the above in a comment below. Subscribe to the channel, and if you like it, tell all your friends who they're subscribed to. I'll see you next time, and meantime, thank you very much for watching.